I want to talk about market manipulation. Now, this is the 4th video in this series. You can check out the other videos on market manipulation if you follow these links here today. Some more examples, right? Ramping the market. So this is when someone goes out there, does some kind of activity or some kind of action like churning, where they're putting out lots of little trades out there. They're pumping up the volume, they're ramping up that volume in an attempt to affect the price. Now, these trades may or may not be executed, but they're really trying to like stir up some activity, get people excited about the stock that don't realize these are a bunch of bogus little trades. Runs. This is also called painting the tape. The idea here is you're going to use either activity like you did with the previous example, or you're actually going to put some rumors out there. Whatever it takes, you're going to do it in order to, again, change the price. Now, this could be, in the positive direction normally, but you could also try to do something to lower the price. Now, a famous run on the market was with the stock Guinness. So some people, they really tried to ramp up the price of Guinness to make them have a bigger market capitalization, so then that they could in turn buy another company. Several people went to jail for this. Famous run out there. Spoofing. Now, of course, spoofing is an internet term where people kind of try to change the receipts and the addresses of emails. So you're basically so it looks like an email's legitimate when it isn't, but that's not what we're talking about here today. We're actually talking about something that high frequency traders do. So they go out there and put 2 little quick bidding offers out there in an attempt to kind of get people to chase their price. They cancel those. They're able to kind of gain off of those, by moving the price up a little bit from where you wanted it if you're a buyer, or moving it down a little bit if you're a seller. This is called spoofing in the financial markets. Stock bashing. Here, this is, I like the name sounds, right? You're just putting out there in terms of information, false and misleading statements in an attempt to drive the price down on a stock. Now, this comes into play a lot when people have these dynamic convertible shares. So they have some instrument that's convertible into not a specific number of shares, but let's say a certain dollar amount of shares. So if they can get that price to go down, then they actually end up with more shares. And once they convert that, then they can kind of reverse this information campaign, pump the share prices up, maybe even higher than fair value, maybe with more misleading information, and then dump those shares. So it's just kind of a way to kind of accumulate more shares by driving the price down, and then profit and when you drive the price back up. There's a wash trade. Now, so this is similar to churning, but here you're actually executing the trade. So again, lots of buys and sells that you actually execute. You're not canceling them. Again, drive up volume, which then hopefully drives up interest in the stock, and then hopefully drives up the price in the stock. So that's it for my market manipulation examples. I hope you enjoyed that. I'm Brian Kozlowski. Thanks so much.